Hi, everyone. This is Jason Burek of Wall Street for Main Street, and this is your Wall Street for Main Street podcast for Tuesday, February 15th, 2011. Today's guest is hedge fund manager Chris Marchese of Cantillon Capital, and he's also the co-author of the Treasure Hunting for Precious Metal Stock report that is now on sale. And he is also a financial writer and blogger for Seeking Alpha and Financial Sense. Hi, Chris.
Hey, how you doing?
Very good. Very good. Weather in DC is actually pretty good here in the winter still. Chris, let's get into it right off the bat here. Silver is in backwardation until 2015. Can you explain to our listeners exactly what that means and some of the implications for that as a silver investor?
Essentially what it means is there is a physical constraint in the marketplace. People are willing to pay more for the next few months contracts, March, July, June, and then I think it goes into backwardation around September. So basically, the market's giving it a negative discount rate, meaning they want the metal now instead of in the future. And in a normal market, it's the other way around.
Yeah, do you think that's because people are beginning to understand the real silver story here and they're, looking at the commitment of traders, or they're, starting to research, David Morgan and Ted Butler, and they're starting to not trust the paper silver products as much?
Well, what I think it is the physical market's just overpowering the paper market. So these are what, the market participants are not willing to write contracts for a higher price in the future. So essentially they're applying a negative discount rate.
I see. And you think a lot of that demand, that physical demand that you were talking about, you think that's coming out of China as China has, now switched from a net silver exporter to a massive, massive silver importer in really just the last year?
Well, it's a variety of things. Most people don't understand the silver market. It's very small. Underground supplies, they're just as rare as gold. Let's see. It's coming from everywhere. It's just setting up perfectly. Inflation, consumer demand, coinage, ETF demand, industrial demand. The list just goes on and on.
Yeah, I agree with you, Chris. I think this is really the perfect storm to be a silver investor. I see so many, bullish fundamentals coming off the silver from the demand standpoint, as, the investment demand is just growing so rapidly for physical. And, you haven't seen the industrial supplier go in there and just panic buy yet, like you did, in palladium about 7 or 8 years ago, when Ford went in there and just, massively drove up the price. I'm waiting to see that shortly.
Yeah, I expect silver to move up relatively soon. Backwardation usually doesn't last long. A market clearing price will fix that problem, but as many people know, there's a lot of manipulation going on. Notably JP Morgan, who is trying to unwind their position at the moment. But I think silver investors will stand to benefit very well going forward.
I agree. Do you have any interesting ideas for people to play silver who are not very competent at the futures market, who don't have the resources or don't want to take the margin out there to go and buy a silver futures contract or a mini futures contract? Do you have any ideas for them to play the silver market as far as stock picks go, or maybe like a mining ETF?
Let's see. I would definitely. I consider Silver Wheaton probably the best company in the world to own. They have a fixed cost structure. They have very little mining risk because it's diversified away. Basically, their business model is much like the royalty company, except they've made it so they receive the physical metal from the actual miners in exchange for an upfront payment, which those miners use to construct a mine, which is very capital intensive. That's probably the best way to do it in the equity market in terms of risk reward. Other than that, there's a lot of good silver miners, gold and silver miners. The ETFs I'm not too crazy about. I think they tend to weight the worst companies a little heavier. I'm not a big fan of Hecla, but one of my favorite silver miners, which is not in production yet, it will be next year's Bear Creek. They already have over 500 million silver equivalent ounces that they've converted into proven and probable reserves, which is just enormous, especially given the valuation they're trading for. I also like Alexco. They're a Canadian mining company. They mine in the Keno Hill mining district. They have a very nice camp, very high grade ore. They're going to be a low cost producer. They've hit intercepts of some gold, some rare earth elements, indium. So that's another one of my favorite stocks. For hybrids, Gammon and Mindfinders are other companies people might want to take a look into. That way, if they're not sure which way they want to go, they benefit both from gold and silver. That's about all I'll talk about. But
Thank you very much for your insights on those, Chris. I think the best thing for gold and silver investors to understand here is that they need to stay diversified. So even if they don't want to, pick out like a GDX or a GDXJ, a mining ETF, like even if, they think Alexco or Silver Wheaton is by far going to be, or Bear Creek is by far going to be, the best silver company, they need to, protect themselves from themselves, and they need to, have shares of at least, a good solid, half dozen to a dozen companies at the minimum there in their portfolios. So let's move on here, Chris. The best performing commodities of 2010 were silver, palladium, and cotton. So Jim Rogers got 2 out of 3 of those right with cotton and silver. Do you think that those commodities will be the outperformers in 2011 here? Or do you think that there will be a different set of commodities, like, maybe a gold, which has underperformed, silver for months now? Do you think, like, gold maybe will be the outperformer here in 2011?
no, I don't think gold will be in the top 3. I think it'll do very well, but I don't think it'll be in the top 3. I think silver will be there again. I think there's a good chance it'll be number 1. I like rice. Wheat was great last April. I guess it's run up a lot, so you might want to hold off on that for a while.
Yeah, I mean,
I'm trying. This is a very tough question.
yeah, I mean, the problem with, naming, rice and wheat is for most investors, those are very difficult plays. Like, there's the food ETF, there's Moo, and then, there's some some paper futures commodity ETFs, but there tends to be tracking error. I know Europac was talking about, this commodities ETF for the Rogers Raw Material Fund that's, like weighted in the ag, but those things don't seem to track properly. So, I think personally that the best way, like instead of picking out rice or wheat or whatever, instead of one individual food, I think the best way for most investors, like who are not, professionals and hedge fund managers like you are, Chris, is to, pick out potash stocks, a good portfolio of those, because, all the farmers, as the prices go up, the farmers are going to, replenish their potash stocks. And they have to do it anyway every 2 years, just to renutriate the soil.
I agree to a certain point. There's only one problem. There's buying equities, there's systematic risks. So as we saw in 2008, the whole market was taken down. Owning something like an RJA or another tracking commodity ETF, it may be beneficial if we do have another massive correction, which is very possible. So, investors might want to consider that.
Okay, so you think then maybe to hedge themselves, then you think like if they were to go long, like a potash corporation or a Mosaic or an Agrium, you think then that the investor should then be willing, to pay those extra premiums then to buy, put protection, do you think? Do you think that would be the best way then to protect
Yeah,
themselves?
if they know how to do that, that would be ideal.
Okay. Okay, very good. Um, Continuing on with our outlook on 2011. Since I already did my outlook on 2011, I'm curious to hear your outlook on 2011 here further. Besides the commodities you think will be the top performers, let's instead talk about where you still see, really good value, in the commodity space. You mentioned rice and wheat, but do you see like the energy complex or base metals, like, uranium miners or rare earths or some of the, copper companies? Do you still see value there, or do you think that these commodities are way ahead of themselves and are not, trading on their supply and demand fundamentals?
It's there's the commodity spaces. You got to be in the commodity space. Right at this particular point in time, obviously, I think the gold and silver miners are probably the best deals because most institutions, hedge funds, etc., know nothing about gold and silver. There's very little investor interest, which will change relatively soon, I'm thinking. But uranium is good. I think copper is a little ahead of itself. Potash is great. I'm not very familiar with rare earths, to be honest, so I really can't comment on those. Yeah, so and oil, of course, oil and natural gas. There's some really good values out there.
Yeah, I think natural gas is probably the ultimate contrarian play. We're just under, the $4 price here on the unit per million liters or whatever of natural gas. And I think that's the ultimate contrarian play, like I said, because, I just hear so much negativity about natural gas, how, there's a supply glut, all these shale plays, there's more than 100 years worth of reserves at some of these shale plays. I don't know if I buy it because some of the other research I've seen on the shale plays, first of all, the shale plays are polluting all of our drinking water. So I don't know how much more they're going to be allowed, to drill the shale plays if people are going to be, dying of cancer using hydraulic fracturing. So, and also the depletion rates of these are rapidly declining after the wells for the shale plays are drilled, like in the Bakken and the Eagle Ford and the Haynesville and the Marcellus. So, do you have any interesting ways to perhaps play, oil and natural gas that, some stocks or something that people can start doing some research on maybe in those areas?
Well, a lot of people aren't familiar with the oil sands. What the oil sands are, it's a higher cost to extract the oil because it's mixed in with sand. But after, even at these prices, $100 and up, they're going to be extremely lucrative. There's enormous amounts of reserves in Canada still. There'll be more development projects that are going to be taken on. So that's one thing that one place investors might want to look. For natural gas, I don't really play natural gas in the equity market, so I don't have any picks at this moment.
Okay, fair enough. For our listeners out there, as far as oil sands play go, I think one stock that I've been watching that I was a shareholder in, I'm not currently, although, I am still watching the company. I think one of those is Quest Oil Sands, symbol B as in Brian, Q as in quiche, I as in Israel. I think they have a really good asset. Management is from a lot of the oil industry. They have a humongous amount of experience on their board of directors. The Chinese have just gone into the oil sand space, recently, and they've been doing deals with the bigger companies. Quest is a junior. They have a very, very good asset. They're not in production yet, though, so there is dilution risk there. For our listeners there, I think they should, put Quest Oil Sands on their watch list as a speculative play. Obviously they don't have the cash flows projected. They don't know when they're going into production, etc. So I think that's a pretty good risk-reward spec play there. Let's see here. What other questions to ask, Chris? Okay, let's talk about your interest rates and China article that you recently published. I thought that was a very interesting perspective there, considering that's the exact opposite of what I'm hearing in the mainstream media. Can you extrapolate on that further there, how China raising interest rates will not stop gold prices from going higher?
Okay, well, I'm going to talk a little about banking. So when a central bank wants to increase or decrease the prime rate, they'll either sell bonds on the open market or buy bonds on the open market. In this case, they would be selling bonds to contract the amount of money in circulation. This would have a lot of effects on their peg to the U.S. dollar. They can't hold the peg and also raise interest rates too much because it can't be fixed. It won't be fixed like that. The market just won't let it happen. So what will happen is, because the U.S. imports so many Chinese goods, both raw materials, finished products, etc. If their currency strengthens relative to the U.S. dollar, it's going to make our input costs rise. When producers have input costs rising across the board, that's not company specific. They are going to pass it on to the consumer. That's going to drive prices up here, which have been held artificially low because of this peg, which has helped, I think, mask inflation.
Yeah.
So really, raising the interest rate in China, it's not a negative for gold, because inflation will just come here.
Okay, so that was actually my next question. You touched on it briefly. I was going to ask, why we're just starting to see inflation, creep up in the prices now, in gas and food and stuff, when the inflation had been created for so long. So you just, explained that very well for us, why, inflation had been being masked. Let's close up this interview here. In the last couple minutes here, let's ask if your views on 2011, how you think 2011 is going to play out, Chris, macro wise, and that'll be pretty much it. Maybe like if you have any ideas, for shorting a particular index, like China might be in a bubble. Like if you have an idea for like an ETF or something to like go after the housing index, or for more aggressive people who want to go after the treasuries, who want to short the treasuries.
A great way to short treasuries, which I've been doing for a while, is through the TLT. It's the government bond ETF that has the longest duration. In other words, it's the most sensitive to changes in the long-term rate, the longer end of the curve, which the Fed does not control. It's determined by the market. In terms of my outlook for 11, things are going to get really bad. Very, very bad. Everything in the government is doing is just the opposite of what should be done, and they've already put the currency, in so much danger that they're going to end up hyperinflating if they continue even a few months more. If the Fed announces QE3, I would say it's a done deal. I would say I'm 100% confident the dollar's done if QE3 is ever announced. I think a muni crisis is going to happen maybe towards the end of the year. which I can't even imagine how the market's going to react to that. Of course, the Fed will probably end up bailing them out, so it'll probably be papered over for a while. But I mean, this is the European sovereign debt crisis on steroids. People made a huge deal about Greece, but California, it's a huge economy, and I'm from California. I live here at the moment, and things couldn't be worse fiscally. So from that, I think muni bonds are just toxic. No one should be owning them. No one should be owning government bonds. Precious metals, I think, will do very well. Silver, I think by 2012 it could go into the triple digits. I know that sounds absurd from the prices it's at right now, but investors should really look into the criticisms of manipulation, because it's very blatant if you're looking at just the data that's available to the public. I mean, that's not even counting the over-the-counter information that we don't get to see. So if you own precious metals, you'll do well. If you basically own any commodity, I think you're gonna be very happy. Don't get scared from volatility. It's gonna be a wild ride. So I guess that's my outlook and best advice I could give
So to
for investors.
So to wrap up, summarize what you just said a little more. You're long all types of commodities, especially the precious metals, and you're long specific commodity futures like rice and wheat. But you think like the average investor, or better than the average investor, but more retail investor, if they want to go long these commodity producer stocks to protect themselves against the volatility, they need to have some put protection in there if they have some options. And if they want to, be more aggressive, you suggested, for like shorting, an inverse ETF like TLT. Do you have any other ideas for possible, ways to profit off the downside? Like, is there a way to profit off the muni bonds on the downside without, buying credit default swaps? Is there like an ETF to go, inverse like munis or something?
There are. I'm not short any muni bonds. I'm just short the TLT, which it's already performed well. I think you'll be fine there. The muni, if our currency does collapse, the muni crisis should be the beginning. If you're short the government bond ETF TLT, I think that's just a more conservative way to go. The muni prices can fluctuate a lot more. But I guess, and own physical metals, that's another thing. Because, hyperinflation, it happened, it sounds far-fetched to most people, but it can happen overnight, and we have all the ingredients for that to happen here.
Yeah, I completely agree with owning physical metal, Chris, at least as insurance, purposes. It's not really an investment, for the most part, especially with the way the tax laws are, structured for holding physical metal right now, how they're taxed as ordinary income and as a collectible. But can you please tell us if anyone is interested in giving any money in possibly contacting you or your hedge fund partner there about investing in your hedge fund, because they want your expertise for silver futures or, wheat futures. Can you tell them, the best way to get in contact with you?
Well, currently we're doing some things on the side, so we're not taking any money, but if anyone, we're also doing some consulting work. If anyone has any interest, you can just go ahead and send me a personal email at Marchese, marchese.chris@gmail.com, and I'll I'll let you know about everything we're doing. But right now we're just we got a lot of money last year. It's only 2 people, so we're waiting a while. But yeah, I'll send you all the information if anyone's interested.
Okay, well, thank you very much, Chris. And having read over your articles for a long time now, you actually got me interested in investing in gold and silver about 3 or 4 years ago. I didn't buy any shares when you started recommending some of those stocks initially. I wish I did, but thank you very much for writing those articles for free and helping educate people like me, so we can learn and so we have some money for when and growing assets for when there is a collapse. Like we're going to be better off and we'll maybe even prosper out of this.
Yeah, no problem.